Hello, Tom Lavecchia here with the latest edition of the New Theory podcast. We have a very special guest, a return guest, Lorenzo Abatello, aka the Modern Day Italian, but he's also known as a CPA, Certified Public Accountant. I asked him to come on. As you notice, we're doing more and more how to run your small business and your entrepreneur endeavor. And we're going to talk about some tax tips for 2021. Lorenzo Abatello, welcome back to the New Theory podcast. How you doing today?
It's always a pleasure coming back. It's the third time.
Third time, that's right. And I've been on his show I think once or twice as we did some lives, and he's a good friend and a good friend of the show. And if you need a CPA, we'll have him put his link below. So there's some tax stuff cooking, and we're going to talk credits today. And credits, first, let's get into the difference of a credit and a deduction, because that's super important. We hear about tax credits, tax deductions. What's the difference, Lorenzo?
Yeah, well, it's a first tip, right? Know your credits.
Yes.
And you need to know what a credit is before you can decide what are these credits. So
correct.
A deduction lowers your income, right? Where you have your income minus your deductions gets a number which you're taxed on.
Correct.
Credit, on the other hand, can be refundable money. It's like dollar for dollar giving back to you.
Versus a dollar versus 20 cents, 25 cents, or 40 cents, depending where you fall. Got it.
Yeah, so if you get $1,000 credit, so a lot of credits are really, you want to say are people know about more educational credits.
Correct.
When you go to school and you go to your undergrad for the first 4 years, you're allowed an educational credit. And then after that, it's called a lifetime learning credit, which you could take if you do your master's. Let's say you go to school at 50 years old, you want to do a law degree because you want to be an attorney. Those are lifetime learning credits. And the government will give you up to $2,500 back to you. And at that, so it's cash in your pocket. So when
really?
You get a refund at the back at the end of the year, right? And let's say you did your taxes, you put your W-2 in, and let's say you got $1,000 refund. Those educational credits will give you more money back. You won't get $1,000 back. You'll get $3,500 back.
Well, for certain qualified educational courses, correct? Wow. And it's called lifetime learning credits?
Lifetime learning credit is one, and the American Opportunity Credit is another educational credit. But there's plenty of others, whether you're in school or not, that you could take advantage of. And this year has been one in particular, is one for history books, because as a tax preparer, there's so many rules that are changing. And if you're not on top of it, you're really missing out on money that can be made and can be get on, especially if you're a business owner. If you're a business owner, there's just so much out there for you in order to recoup from just the year that we had.
So if you're like me and I might want to take a programming class, I spend $2,500 in an accredited institution or whatever it is, I get that money back against my income, correct?
You can get it back. It's your income.
I love it. Okay. So hold on. I know we're talking about EDA, right? Now we're talking about ADA, because we're going to talk about that a little bit too, is also you could build a website for somebody, or you can get a website essentially done for you, make sure it's ADA compliant, American Disabilities Act, and the government would essentially give you money for that too, correct?
Yeah, that's a really good one. That's a really good one I use. And it's one that's really could be strategically, if you're someone who, this is actually a great one for yourself. Okay, even this for contractors. Okay, so ADA compliance is very broad. There's a few things that you can take advantage of the ADA compliance. And for those who don't know what ADA compliance is, it's getting something up to date for someone who's disabled.
Correct.
Someone who's disabled, who they can't see, they can't hear, they can't walk, so they're in a wheelchair. There's so many different disabilities out there. And a lot of times the government gets involved in saying your business needs to be ADA compliant. That's why you see restaurants need a handicap bathroom.
Correct.
Right? That's something that we can all kind of see, like, oh, there's a handicap bathroom and then a regular bathroom.
Correct.
So what the government did, because a lot of these places aren't fit up to code, they gave an opportunity for these businesses to get money back, to put the money that they need to. Like, a lot of times these buildings are old and they need to be done differently to become ADA compliant.
Correct.
One thing that's really interesting is they have ADA compliant websites.
Wow. Tell me about that.
So there's a list, right, that has bullet points say you need to be ADA compliant. For example, someone who can't see.
Correct.
hear it, right? So to be able to voice text something, there's a whole list. You can go to the ADA compliance website and see that what an ADA compliant website is. But if I, as a website designer, say, hey, Tom, I want to do your website for you. It's going to be ADA compliant and it's going to cost you $5,000. However, of that 5,000, I'm going to make it so, because I am ADA compliant and I know the rules and I'm very well versed in it. You're going to be able to get 50% of that back as a credit, cash to you. So yeah, I'm going to charge you 5,000, but really it's only going to cost you 2,500.
Wow. I was reading about that, and I know you and I are chatting about that. So it's basically 50 cents on the dollar. And I think it goes up to 5K, right? I think you could spend, 10K, and get back 5 in credit. So even more. So let's say you want more bells and whistles, which everybody always does. You could always go bigger and still get 50 cents on a dollar in credit. Not deduction, but credit, correct?
Correct.
See, that's amazing.
All right. And I'd like just to expand on it. There's even more other types of credits very similar to that.
Yeah, please.
Cybersecurity is a huge issue right now. There's a cybersecurity credit.
Are you serious?
Yeah. So like I just was on the phone with a client of mine who has a phone service business, right? They do let's say you have a big company and you want to outsource your customer service.
Correct.
I pull my friend's company up and he's got international people, he's got domestic people, whatever you want as your customer service arm. Yeah. You can subcontract him and he can provide that to you. So with all this information, FedEx is a client. So FedEx's customers come to you, you get their information. There's a lot of security, liability on
nuances. Yeah.
Just having all that information. So if you work with a government approved cybersecurity company, yes. So these guys need to go in and get approved by the government. You can deduct as a credit, get money back by issuing up to $10,000 to make your company improve their cybersecurity.
Wow. So if you're a cybersecurity firm, you should be going out there and saying, hey, you do this, you get X amount off, that kind of stuff. So it looks like they're trying to foster ADA compliance with websites. And then number 2, the ability to make sure smaller businesses have cybersecurity access, because it is expensive. It's like insurance. You don't think about it until it happens, right? But if you be proactive and there's a tax credit and you could put that little badge on the bottom of your site, say, hey, we're cybersecurity secure, makes it a little bit easier as well. All right. There's some other stuff you wanted to share, because there's a lot of moving parts this year. And I got to be honest, I do my own taxes, but it's a headache. So far I've learned 2 or 3 ones I didn't know fully about, And
I don't want to backtrack, but I would like to for just this one moment, because
please.
There's one part of this missing that I think can apply to a lot of people, whether maybe they aren't really ADA compliance not important to them, or even cybersecurity. But a lot of people have employees.
Yes.
And now with the pandemic, there's the client retention credit. There's the something opportunity credit. Employee retention credit is one more. So I'm on the tip of my tongue, but what it is if you hire a veteran, you hire someone who's disabled, you can get money back for that person.
Oh wow.
That person.
Oh wow. And then if you have let's say you do a Schedule C, you would do that within there, correct? And then again, lowering your tax liability for that Schedule C, correct?
So what I would suggest with anyone who has employees to contact their payroll service, so ADP, HX, whoever you use, because they handle a lot of these credits for the payroll. So what I would suggest is giving a call to your ADP provider or various payroll provider and say, listen, I was listening to this podcast and I heard this talking about credits with payroll. And so you just give them a call and they'll know all the rules, because there are limitations.
Yeah.
For example, if you made over $1 million in the prior year or have over 30 employees, that ADA compliance credit is completely gone for you. So you have to be under that threshold. So there are rules to this. So just do your research, talk to a tax professional, and ask your questions before obviously moving forward with any of these.
Makes perfect sense. And so why did you get into taxes? You're a smart guy. You're a dynamic guy. Taxes sometimes seem a little bit, how can I say, boring, but you're a dynamic guy and you seem to be doing really well with it. And I know you do other stuff as well because you're an entrepreneur, but why did you become a CPA?
Well, I became a CPA of the guidance of my father. That was really where it's the base of it started. And over the years, I definitely struggled finding my path within it. However, I stuck with it, and I didn't give up. And I had a little hard head, that Italian is like, I want to make this work. And over the last year and a half, like something switched where I got out of the computer and that nitty gritty, which everyone thinks is accounting, and really understood what to do with a tax return and advising people. And now I'm the people person in it, talking to people, helping people out. Yesterday, this is a separate conversation. I'm getting to the most insane situations. It's out of a movie. Like, it has been so much fun this year dealing with people. You become like a financial therapist in a way.
Yeah.
And that's been my sweet spot, working with people, which has been fun.
Now, as a CPA, and we'll get into the extension to May 17th. We'll get to the federal. We'll get to that in a second, because I don't know if that passed yet. But in terms of CPA, you're getting access to people's most precious information, which is their financials, right? So without giving information of who they are, because it's obviously privileged, who kind of made out in 2020 for the pandemic? Who got crushed? What are you seeing in terms of filing and industry? Walk us through that a little bit.
That's a great segue, because the first one was know your credits. We were doing 3 tips, right? That was the original point. So the second was know the rules. And this year, there's been so many rule changes, like knowing, understanding what's happening. They just passed the rules last year. They just showed with proposals for the tax hikes a few days ago.
Yep.
It's scary. It really is. It's scary. There's definitely changes. We've been printing a lot of money out, and there's going to be consequences to that. So we're still seeing what's going to end up happening, but 2020 is in the books. We've had the rules for 2020. And if you collected unemployment in 2020, they just recently allowed you to the first 10,200 is tax free.
Wow.
People who've had unemployment, I'm seeing a $2,000 plus extra refund coming to them.
Just above and beyond. Wow. So it's like, whether you're unemployed, whether you got PPP, that's a whole nother discussion. No matter where you fall in the gamut, there was a lot of assistance, and it looks like some of the assistance they gave out will be, tax exempt or release some tax relief. And again, from maybe industry wise, has any prospered? Like, I'll give you an example. For me, own a magazine, New Jersey Digest. We got crushed in ad revenue for a while, right? Places aren't open; they can't do ad revenue, and that's usually the first to go. Marketing expenses are usually the first to go, which I think they should be the last, but that's another discussion. But my shipping business, I own a UPS store in Summit, New Jersey, and that's been doing well, knock on wood. Got kicked in the nuts in the beginning, but UPS is doing well. So shipping, good, and advertising, not so good. What are some of the verticals you're seeing prospering, and some of the ones you're seeing getting harder hit from your perspective?
From a business side, anyone selling something online. So I have people who sold courses. I have a weird niche with these coaches. Well, I have a lot of real estate clients. All my real estate people had a great 2020.
Yeah.
And really, just about everyone who invested in something. Huge
stocks or whatever that is. Yeah.
Huge stock market gains. I mean, I got who made 600 grand just trading Tesla.
Damn.
Who has $2 million in Bitcoin now, like absurd numbers. And what's happening is it's pushed me now to learn more on how are these people going to save some money? Like, if you just had 2 million in crypto gains, even 100 grand in crypto gains,
correct,
you're hit with a capital gains tax. And that could be upwards to your ordinary, depending on how much money you could be.
Even crypto gains?
Crypto gains are treated just like stocks. If you buy something at $100, you sell it at $200, $100 gain, you pay if it's short-term or long-term capital gains.
Well, let me ask you this. So without getting political, and you kind of touched on a little bit, it looks like we have a Democratic House, Senate, and President. It looks like we're going to have a tax hike. So let's assume we have a tax hike. What are some of the things you should do now
Yeah.
in preparation? Should you realize gains because they're going to be higher tax rate later? Should you maybe cash in some chips? Walk us through. I know broad, everybody's different,
That's
but what are
fine.
some of their broad strategy if you know taxes are going up?
So one thing in particular, which I hope they don't do, they said that they're not gonna do it, but they were gonna move the top marginal rate from 400 to 200,000,
Hey,
400K to 200K, and a lot of people make 200K.
especially in our area.
Yeah, so that would be disastrous and horrible for the middle class. But it says that he's not doing that, which is fine.
Which really quick, I don't care where you're listening. We have a lot of random people out of Oregon, but people throughout the country, people throughout the world. In New Jersey, if you got like a decent house, decent property tax, decent car note, all this stuff, and you're making 200K, it's actually middle class at best. And this is not being insensitive or anything else. It's just the truth, you know?
Real estate taxes, property taxes alone in New Jersey or New York can be upwards to $25,000 a year.
Mine's 22K, and our friend Trump limited it to 10K. So that other 12K, it takes me 35K to make 12K. So I basically burn 35K a year. I heard they may bring that back though. Any rumor? Did you hear about that rumor? They may bring the tax credit back for.
But then, if they bring that back, they're taking on other areas. So it's going to be coming from one spot or the other. But to answer your previous question, who's going to get hurt the most and what can you do? The working man is going to get hurt the most.
The working man's a sucker.
Who makes good money?
Yeah,
is going to be trapped by the government. They have control of your income. They control your taxes. They control your rate. You have lost all control of your money if you are a working man on W-2 making good money.
Yeah. They call them Henrys, high earning, not rich yet. They're called Henrys, and they're very common, or used to be very common in New York, New Jersey area. I know pharmaceutical reps that make like 250. They do pretty well. They're W-2'd, and it looks like they may pay a bigger chunk, especially if they increase the marginal tax rate or the level from 400 to 200, because that's gonna hit us disproportionately in the area. So give us one last credit or one last thought before we conclude, Lorenzo.
So how do you stop that? That's going to be so what's the solution then, right? Because it can be scary. So what's the solution? And anyone who's in business for themselves. Yeah. So that's really one of the biggest solutions, because if you're on the books for 250K, you're getting taxed on 250K if it's your W-2.
Correct.
However, if you did 250,000 in business income, the tax number you're going to pay on is not on 250K. It's 250K minus your deductions.
Correct.
Minus your business expenses. So let's say at the end you're showing 100K. You're getting taxed on 100, not on 250. So if the marginal rate, if you can control where your rate's going to fall in on showing with your deductions, you have more control of your money.
Always. And whether we like it or not, being an entrepreneur or being a small business owner, there are tax benefits versus not. But there's also, you can't collect normally. You normally can't get certain benefits that you can't. So there's pros and cons, but it's definitely a system tax-wise that does favor the person who has their own business. So one question I do have for you, Lorenzo, is being at home. We had to stay home certain times. And I don't have an office like I used to, and I'm using more space for using my Starbucks front window here, but I'm using more space for business. And the number one trip up I used to hear for audits was, don't be aggressive on your at-home stuff. But we're all working from home now, and we're using more home space. Walk us through the home space deduction and give us some guidelines and tips for that as well. Because historically, they're like, well, measure your area to the portion of the house and be conservative. And TurboTax is a red flag and says, this is the one area that's going to get you friggin' audited. Well, bitch, I'm fucking using my whole house now. So walk us through that a little bit.
There's nothing to be afraid of.
Yeah.
So for me, when it comes to audits, this is my philosophy.
Yeah.
In doing business, tax returns, and taking deductions. It's be smart about what you do.
Correct.
Right? Document what you do, and then if an audit comes, what are they going to ask you for? They're going to ask you for your bank statements and your credit cards.
Correct.
Right? No one's an IRS agent's not coming over to your house and measuring your room. It's not happening.
Yeah.
So you need to be just realistic about it, and what's realistic to your industry. If you're in real estate, what's realistic expenses to real estate? You're in media. In media, you're going to have high subscriptions. You're going to have high advertising costs. You're going to be paying people to do editing. You're going to be paying photographers to do things. You're going to have printing costs. So having a home office is not irregular to your business.
Good point.
So why would an IRS agent come to you and say, no, you did 50 more square feet? So there's two ways to calculate your home office. You could do the simplified version or the direct costs or indirect costs. So the simplified version is taking, okay, my house is my apartment's 1,600 square feet, and the room I'm in is 450 square feet. And you get $5 for every square foot.
Got it.
You can then, if you don't want to do that, you can calculate a good CPA will do both of them to see which one you're better off with. Would calculate, okay, what are all my direct expenses or indirect expenses to this home office, meaning your utilities, your rent or your mortgage, your insurance for the home, the repairs to your property, the decorative, even to the decor of your room. And that's just using the tax code for what it is. You're telling me that I can deduct the direct expenses to my home to the proportion of what my office is. So what is there being really afraid of from the IRS, saying conservative or not, if you're telling me that I can take the direct expenses to my home and proportion it to the home office? I redid my sheetrock. I painted everything. These are renovations to my home and repairs.
Yeah, true. Well, I although we still are, compliant in terms of COVID, social distance, wear masks, etc. I had somebody come over last night and sit down in the living room, and we did business. I don't have an office anymore because we got rid of it. So, I welcome. I'm not that. No, I don't welcome an audit, but if I got challenged, I feel comfortable about where I stand because I do have people come over. There is a difference. I know if I have a staff meeting and I feed us for employee meals, first I know the entertainment expense is essentially gone. So we eliminated that completely because one, it doesn't really conducive to our business, but number two, we don't woo clients anymore. It's more, Zooms and that kind of stuff. So if I do have a meal, I have it with an employee or a stakeholder and not that. I think they're going to bring back the restaurant meal credit for entertaining. They're going to have to help restaurants. Otherwise, restaurants are in trouble. I know you're unique because you know a little bit more about restaurants than others and a CPA. Any tips for our restaurant colleagues out there that God hoping they made it, but walk us through that a little bit.
Definitely. There's one that's awesome for especially restaurant owners. So first and foremost, there's the payroll credit. If you lost business, I suggest right away contact your payroll provider because you can get up to $7,000 per employee per quarter as a credit.
Really?
Yes. Huge. Wow. Then also Form 7202. It's a credit for business owners if they were out for COVID. So you can get paid up to 2 weeks if you had everyone was affected from COVID in the restaurant industry. So they're all qualified, and they can get, depending on the sales that they have, paid up to 2 weeks sick leave.
Oh, wow. Wow. These are good stuff.
No brainer for any restaurateur to go ahead and do this, especially if you were negatively affected.
All right. So Lorenzo, I'm sold. I'm using it. How can we find you?
Pretty simple. It's lorenzotax.com. You can info me at info@lorenzotax.com. My last name is difficult, so I take it out of the whole spiel.
I like that. Simple lorenzotax.com. Check him out. I'll put a link below. Lorenzo, grazie. Benvenuto oggi. I love that you're on all the time, always available. This is his busy season, guys and gals. You will not see him on any other podcast probably till May because he's that busy. But really quick, is the federal extended to May 17th officially or not yet?
It's officially extended. I booked my ticket to go to Florida 4/16, so I'll be in Florida 4/16 still.
hitting the keyboard on Miami Beach.
Yeah, you can see me in Florida if you want.
What about but check your state though, right? We got to, or does state automatically for each one, or check your local state?
It's postponed a month.
You sure for New Jersey? I'll check.
I'll double check that. But if they're going to extend the federal, every state is extending.
Got it.
Yeah,
So,
you cannot. They have to follow the rules.
Yeah, because imagine
another week, and then the federal government's going to mandate it. There's no way.
True. Imagine doing one and not the other, and it's good for me because I pay every year, so I'll hold on to that little scratch that I make for another month. Lorenzo, as always, thank you for being on the podcast.